Hello everyone, this week's trade is oil and for obvious reasons. There's a lot of major catalysts around it right now, but we'll keep the segment more technical and you can check our website and channels for deeper insights on how those developments could move prices. So let's start with the weekly chart. We had been trading in a clear downtrend channel since September 2023, with lower highs and lower lows shaping the structure. That trend held quite cleanly until late February, early March, when rising tensions around Iran triggered a very sharp upside move and eventually broke the channel. Looking at it with a zoom out perspective is useful because the move pushed prices back towards level we hadn't seen for some time. In fact, crude now trading around levels that we did not see since October 2023, while the spike itself briefly pushed prices close to $116, levels we hadn't approached since 2022 during the Ukraine war shock. Now, if we zoom in on that downtrend structure, we can clearly see how consistent it had been. The breakout happened very quickly, and the speed of the move meant local resistance levels were not very useful. That's why we turned to Fibonacci extensions. Using the recent uptrend that began in April after prices tested the lower boundary of the channel and extending it toward the highs that nearly broke the downtrend around June 2025. When we apply Fibonacci extensions from that move, we start seeing levels that become technically meaningful. Prices surged all the way toward the 261.8% extension near $116 before sharply correcting. The market then dropped back below the 161.8% level around $92, briefly retesting the breakout area on the downtrend before rebounding again. Today, the key level to watch is exactly that 161.8% extension, which the market is currently testing again. At the same time, we're also seeing prices interacting with a strong local support around $89. Now, given how extreme the recent move has been, it's also interesting to zoom in to get a better sense of that trading structure. Here we can see that prices rebounded sharply from around $75 to $95, forming a clear ascending channel. Currently, prices are still trading above the short-term uptrend and above that key level around $89 that we highlighted earlier. This area is important because it previously acted as resistance and now is being retested as support, while also sitting near the lower boundary of the recent uptrend. It's also worth noting that this level aligns closely with the gap area that opened earlier this month, which adds another technical layer of support for traders watching the continuation of the move. In the near term, the key question is whether $89 can continue to hold. If it does, it could help protect the bullish structure. But if we see a break below that level, prices could rotate back toward $82.5, which has seen significant price activity recently, and then potentially $75, which sits closely to the base of the recent rally. So now the $89 to $92 zone remain the key battleground, and how prices behave around this range will likely determine the next move in oil.